BYD recently celebrated its 1000th electric vehicle sale. That is something. Now, guys, most of you know I'm a big fan of BYD, and they are one of the most vertically integrated vehicle manufacturers in the world. Welcome to the channel. My name's Sam Evans, and you're watching The Electric Singularity. If you haven't already, make sure you subscribe to get the latest, most interesting, most important EV news anywhere on YouTube. Now, BYD, like I said, is one of the most vertically integrated automakers in the world. They're dedicated to providing zero-emission energy solutions within the transportation segment. They make their own batteries. They make many of the components in an electric drivetrain. They have the capacity in the production of passenger and commercial EVs with rechargeable batteries and semiconductors to scale up massively. The automaker is ready for big gains from the next decade of global electrification. I believe that $30 is a reasonable share price range or a reasonable share price for BYD. Currently, they are massively undervalued compared to other automakers or other technology companies, which BYD is, guys. They're not just an automaker. They make a range of things, semiconductors, batteries, not just for cars, for phones, for other applications, for scooters, for trucks. They aren't just an automaker. They should be classified in the same sort of way we classify a company like Tesla. So things are changing quickly at BYD. Soon they'll be releasing their range of cars in Norway and Australia and New Zealand and the UK. Next year, it's my personal belief that they will release their electric vehicles in the United States in 2022. Now, you've heard it here first, guys. Come back here in 2022. If it doesn't happen, you can lambaste me, you can unsubscribe, you can say whatever you want. In fact, you can dare me to do something and I'll do it because I'm confident this will happen. Now, the pressing call for carbon reduction in recent years has encouraged a global electrification tide. That includes an evolution in the auto industry towards new energy vehicles, EVs. Despite a slump in global automobile sales in the past year due to the coronavirus and events surrounding that, EVs remained disruptive against the downward trend, with global sales up 43% year over year. The surge in demand has brewed a historical opportunity for all participants involved in the EV supply chain. Those not in that chain or those who are taking too long to move into that chain are going to suffer enormously. Now, you can see my video about BMW. BMW recently said they don't plan on having they plan on having only 50% of their car range electrified by 2030. So 50% of their cars will not have a market. It is my belief there will be zero interest in buying a gas car at a higher cost versus an electric car in 2030. Would you do that? Would you buy, personally, a gas vehicle for more money than the equivalent EV in 2030? Because that's what it will cost you. It will cost you more. I don't think so. I highly doubt it. Now, BYD is one of the most vertically integrated automakers in the world. And like I said, they are in a position to take advantage of the opportunity currently presented within the EV supply chain described above. If you didn't know, BYD has joint ventures with a range of different businesses, including Toyota and Daimler and many others, which I talk about in my BYD 2021 video. Link will be in the description below. Okay, let's have a look at BYD as an overview of the company. BYD, founded in 1998, recently celebrated their milestone of 1 million cars produced on May 19. They are considered as one of the most vertically integrated automakers in the world. The company operates under the following segments: automobiles and related products. BYD's principal business, which involves the manufacturing and sales of both electric and traditional petrol-fueled passenger and commercial vehicles. The business segment operates under a 7+4 full market EV strategy that encompasses 7 traditional transportation fields. These include passenger vehicles, buses, taxis, coaches, logistics vehicles, construction vehicles, and sanitation vehicles. And they have 4 specialized transportation fields: warehousing, mining, airports, and ports. BYD's passenger vehicle fleet currently boasts more than 10 battery-powered and petro-fueled models. Passenger vehicle sales are primarily concentrated in the Chinese market, with a small number of sales made overseas. That will change within the next 12 months drastically. Now, if you're not aware, the reason I say drastically is because primarily of one vehicle. Now, when I say primarily, BYD have a range of vehicles that will disrupt the petrol car market overseas outside of China hugely. However, one of those is extremely important. That is the BYD EA1. Now, there'll be a link to that video in the description below as well. The EA1 will cost around about $22,000 US, in Australia $30,000, and it will have a realistic real-world range of 400 kilometers. This is the car that will change the market. It will be cheaper than most of its petrol counterparts, and this car will be extremely important for the automotive industry. I believe it represents a tipping point in the process of electric vehicles becoming cheaper than petrol, which will happen without any doubt within the next 3 years. Now, BYD also are in the market of urban rail transportation. The company's newest milestone, SkyRail, I have a video on that too, guys. You can see that in the link below also, is a pure electric rail transit solution now under construction in the Bishan district of Chongqing and Pingshan district of Shenzhen in China. Now, actually, that construction project has actually now finished, but I believe BYD may be about to extend that. The company has also secured contracts to construct the first electricity-powered Bahia SkyRail and Line 17 in Salvador and Sao Paulo, Brazil. Now, what that will do is enable people to see the coast of Brazil on a SkyRail, and it will enable people to save enormous amounts of time by not using Brazilian roads. I believe a number of countries will see the success of this project and decide to implement BYD's solution here in their own countries. Rechargeable batteries and photovoltaic products. BYD is one of the largest rechargeable battery manufacturers and renewable energy solutions providers in the world. The business and segment produces batteries for products ranging from home electronics to electric vehicles. BYD is also engaged in renewable energy production and storage through their photovoltaic products business. Okay, the next area they specialize in, mobile handset components, assembly service, and other products. BYD provide R&D and manufacturing capabilities for consumer electronics, including smartphones and laptops. The business segment also includes BYD's semiconductor production unit, which is being considered for a potential spin-off listing in the Shenzhen Stock Exchange, China's top-selling brand. BYD has become one of the most recognized auto brands in China, and I believe it will be one of the most recognized auto brands in the world within 2 years, primarily because, like I said, of the BYD EA1. With more than 427,000 vehicles, inclusive of EVs, petrol-fueled vehicles, and commercial vehicles sold in 2020, China accounted for more than 52 billion RMB, or 63% of total segment revenues. Electric and petrol-fueled passenger vehicle sales have also soared by more than 60% year over year, with more than 150,000 combined units delivered as of April 30. The brand accounted for more than 6% of new car sales in China during Q1. As a result of their popularity on home soil, BYD has proudly upgraded themselves from a made-in-China brand to an official Chinese brand. In order to maintain the momentum that BYD has built for their brand over the years and ensure their relevance in the industry, the company frequently updates their existing fleet with new models, new powertrain systems, new batteries, and with facelifts. In 2020, BYD launched new models called the Han, the Tang, and the Song Plus. They also revamped their buses with the BYD Blade batteries. The former two are pure EVs running on the brand's newest Blade battery technology, which enables a safer and longer range driving experience. The Blade battery, one of its main advantages is its ability to be recharged 3,000 times without losing significant capacity and maintaining over 80% rate of charge. Its other significant advantage is the fact that even if pierced, the battery does not set on fire. This is, in my view, a big advantage to this battery. The other advantage to this battery, I would say the third significant advantage, is its cost. Because BYD manufactures this battery themselves, they save a significant amount on the cost of the battery. In addition to that, the battery does not need rare earths, and that also saves money. Because it uses lithium iron phosphate, the battery is significantly cheaper to manufacture compared to traditional lithium-ion batteries, which use other things like nickel and cobalt. Now, the Song Plus is a fuel-engined or petrol-engined SUV equipped with BYD's new generation 1.5 Ti high-power powertrain. This vehicle guarantees reduced fuel consumption and higher transmission efficiency, and comes at an extremely competitive price of 115,000 to 143,000 RMB. This has further bolstered its sales and the brand's overall competitiveness in traditional petrol fuel vehicle sales, despite a downward continuous trend in demand of those petrol vehicles. BYD also launched their newest hybrid technology in November of last year called DMI, an ultra-low fuel consumption option that offers a travel range of over 1,200 kilometers on a full charge and full fuel tank. This addresses public concerns regarding the limited travel range of EVs, and I believe BYD's new range of batteries further also address that issue. Now, BYD have an aggressive marketization strategy. Here is what it's all about. A common recurring theme in BYD's latest annual report is the company's emphasis on marketization. By way of marketization, BYD aims to anchor their position as a leading OEM manufacturer and brand within the EV industry in the long run. In 2020, BYD has taken several initiatives as part of their marketization strategy, including but not limited to the following. Now, as I discussed previously, BYD has a joint venture with Toyota. This is an R&D unit specialized in battery electric vehicles. Toyota, albeit a pioneer in the hybrid industry and a globally recognized automaker, has basically done nothing to make a full EV. So they made a joint venture with BYD, and this will increase Toyota's leverage in the electric car area while also increasing the brand's exposure on a global platform. Now, if you didn't already know, many people are aware of this BYD joint venture with Toyota, and this gives BYD the perception of quality. If BYD has a perception of quality because Toyota is using their vehicles, is using BYD's parts, products, batteries, drivetrains, etc. to manufacture the Toyota vehicle, why would you not pay less for the equivalent BYD vehicle? Well, I would. Now, number 2, acquisition of equity interest in companies along the EV supply chain. Alistar Technology, research and developer of chip technology, which could be vertically integrated into BYD's production line of passenger and commercial vehicles. This joint venture helps to increase BYD's market share in global chip supply profits, and also helps to prevent BYD from having supply chain issues for chips in their own cars. Now, the third joint venture, which is important, is with Canadian Solar Inc. Canadian Solar Inc. is one of the world's largest renewable energy solutions providers and solar plant operators. Now, this investment by BYD will benefit BYD's photovoltaic and energy storage business through the contribution of Canadian Solar's photovoltaic development expertise. Now, BYD's fourth important joint venture is with Hunan Yuneng New Energy Material Co., who are a lithium ion and lithium iron phosphate battery manufacturer. This investment will increase BYD's share of rising global battery sales and soften the impact from competition through profit sharing. Now, in addition, guys, to all of these joint ventures, BYD semiconductor business has recently made a capital raising and a spin-off. In 2020, BYD raised RMB 2.7 billion from institutional investors in exchange for 28% equity interest in their semiconductor business. Currently holds 72.3% equity interest in BYD Semiconductor. BYD currently holds a 72.3% equity interest in BYD Semiconductor and is proceeding with plans for a spin-off public listing on the Shenzhen Stock Exchange. The move is expected to enhance BYD's access to financing and brand exposure needed to bolster their competitive strength in the long run. The above initiatives, joint JVs, and developments going on at BYD are all part of BYD's marketization plan, and they will not only increase their market share within the automotive industry, but also drive further cost efficiencies and cost reductions through vertical integration, and I believe these activities will enable BYD to increase overall profit margins. Now imagine if you're another car manufacturer buying these batteries, buying these parts from BYD. Obviously, that your costs are going to be higher and your margins are going to be lower than BYD's are. Now, right now, BYD are positioned for an accelerated growth phase. BYD is adequately positioned in the middle of an opportunity-filled era for every arm of their business. And I mean every single part of their business has potential for huge growth. With the increasing demand for EVs observed in 2020 and huge increase in sales of BYD's vehicles in the first quarter of 2021, it is highly likely that 2021 will be a pivotal year for the global EV market with record-breaking sales. Global EV sales are expected to grow at a compounded annual growth rate of 17.4% by 2027. Now, I believe that's nonsense, and I believe EV sales will grow at an average rate of at least 40% per year until 2027, by which point that number will dramatically increase to the point in which by 2030 there will be no petrol-powered vehicles for sale on the market at all because there will be no demand for those vehicles. Now, electric passenger vehicle sales in China alone are expected to increase by more than 50% in 2021. And according to the Chinese State Development Plan for the New Energy Automobile Industry 2021 to 2035, EV sales are expected to account for well over 20% of total new car sales in China by 2025 and become the mainstream choice by 2030. BYD's extensive selection of electric passenger vehicles, combined with their affordable price range, most of which retailing below the Chinese government EV purchase subsidy program threshold of RMB 300,000, makes the brand an attractive choice for those searching for a new car, thus enabling the brand to capture a large share of the incoming demand. Now guys, remember, Tesla and NIO make great EVs, but most of them are not eligible for the Chinese government EV purchase subsidy program threshold of RMB 300,000. This is a bit of a deterrent to many Chinese buyers from buying their vehicle. Now, another area we need to discuss when it comes to BYD is the global electric bus market, which is expected to grow significantly in the next 5 years and reach at least 600,000 units by 2026 due to increasing demand for zero-emission public transportation. Nobody wants to see a bus spewing out disgusting diesel fumes, which more and more people are aware actually cause cancer, when they can be on and see and be around an electric bus. Obviously, it's not a good look for governments to have these diesel buses when electric buses are available. Now, BYD's electric bus sales have already made significant progress in the last few years, with more than 9,000 buses delivered domestically and overseas in 2020 alone. BYD stands to deliver over 15,000 electric buses in 2021, and I believe that number will double at least in 2022. Their track record combined with the electric bus demand prospects assure promising growth within BYD's commercial vehicle sales segment. Now, the company's semiconductor business is slated for significant long-term growth as the automotive industry becomes more dependent on chips for everything from computer management of engines to driver assistance features. Chip manufacturing plant shutdowns due to COVID from the past year have also exacerbated supply levels, causing a sharp jump in demand across the industry. Many automakers have already scaled back production levels due to the supply bottleneck, which is expected to worsen before it gets better. BYD's semiconductor business is bound to benefit greatly from these increasing demands, and the semiconductor business will also help bridge the gap between global chip manufacturer capacity and demand from BYD's own EV production line, turning an inopportune time within the industry into an excellent opportunity for BYD. Rechargeable batteries. Now, BYD's rechargeable battery and photovoltaic business is also expected to benefit significantly from increasing demand for clean energy and batteries. Global demand for solar energy will soar dramatically over the next 5 years due to aggressive emissions reduction targets pledged by governments and enforced by regulators on industrial manufacturing plants, but also due to the fact that it has now become cheaper to replace existing coal-fired power stations with solar wind power stations supplemented by battery storage. Yes, that's correct. It is now cheaper to replace coal-fired power stations with renewable energy. This will drive an enormous increase in demand for lithium batteries. Global lithium-ion battery sales are also expected to grow at a CAGR of around about 15%, representing US $92 billion in sales by 2026 due to increasing demand for EVs, as we've already discussed in this video. Now, based on these forecasts, BYD's latest marketization through the acquisition of equity interest in battery producers and solar energy providers is bound to further enable the business on capturing these opportunities. The brand's latest expansion of their battery manufacturing plants in both Brazil and Europe, and also in China, will enable them to profit from the anticipated surge in demand with additional production capacity. BYD have an enormous ability to increase their production capacity within the next 12 months. Now, last but not least, BYD's established handset components and assembly service business, which already has long-term contracts with notable brands like Samsung and Huawei, will also benefit from the surge in demand for household electronics. Global mobile phone, 5G, smartphone, and laptop production and sales volumes are expected to grow by 10%, 37%, and 9% year over year in 2021, indicating material growth potential for this segment. Based on all of those above issues we've spoken about, everything's in place to align over the next 5 years for BYD to significantly increase their market share and sales in a range of different areas. Considering the favorable performance observed year over year in every one of their business segments, BYD is perfectly positioned to take advantage of the aforementioned growth opportunities. Now let's talk about BYD's excellent fundamentals. BYD has demonstrated solid fundamentals required to support continued growth in every arm of their business in the long run. Unlike its car competitors in China, BYD hasn't had to be bailed out by multi-billion-dollar subsidies over the past 24 months. Despite a decrease in global new car sales in 2020, BYD still managed to grow their automotive sales segment revenues by 38% year over year to RMB 82 billion. The mobile handset components and assembly service segment and rechargeable batteries and photovoltaic product segment also recorded a year-over increase in revenues of RMB 59 billion, which was plus 13%, and RMB 12 billion plus 20% respectively. Overall gross profit margins grew from 15% in 2019 to 18% in 2020, indicating the business's increasing cost efficiency achieved through their highly integrated business. The company recognized RMB 6 billion in total profits last year, representing year-over-year growth of 184%. Now that was in a downturn year. Imagine how well they're going to do in an upturn year. Now I expect 2021 to be a hugely important year for BYD based on my perceived anticipated growth in the business segments in which they operate. My forecast estimates that total revenues of RMB 197 billion and profits of 6.6 billion by the end of the year, representing a 28% and 11% year-over-year growth respectively. This is my downside forecast. For my upside forecast, you can actually double those figures. Now, this positive outlook is further corroborated by BYD's recently released first quarter results, which reported total revenues of RMB 40.1 billion. This represents a year-over-year growth of 108%. Considering BYD's business prospects, I am forecasting combined sales to grow at a CAGR of 18% from 2021 to 2026, and this is on the downside. This is the conservative growth rate. Conservative. Now, the valuation of BYD. Based on the above analysis of BYD's fundamentals and growth prospects, my valuation for the business yields an equity value of approximately 320 billion to RMB 400 billion, which translates to US $19 to US $23 per share. BYD was last traded over the counter on May 21st at $21.60 per share, which is within a good value range, but it doesn't take into account the enormous potential of this company. If they achieve growth rates of 25% per year, which I still believe is low, they may be worth much more than this valuation. With significant upside potential in the long run based on growing global demands for all their market segments that they have to offer, there is huge potential for BYD over the next 5 years. Now let's talk about navigating competition. A challenge right now for BYD is the increasing competition within the EV production and sales space. Now, obviously BYD stands to profit from this, but also they will have some challenges. Almost every traditional petrol-fueled automaker has started to incorporate EVs in their fleet. Even the Ford F-150 is looking to electrify this in 2022. Remember that all of these automakers are going to struggle enormously with having enough battery supply. Ford only have the capacity to supply 50,000 F-150Es in 2022. Obviously, the market will want a huge amount more than that. Now, in addition to the impending threat of already established automakers, are other domestic EV manufacturers such as NIO, Xpeng, and Li Auto, plus Geely and SAIC, who have auto brands like MG. Now, these brands have further diluted BYD's share of global EV industry profits. However, BYD has been and will continue to be successful in differentiating themselves from competitors like NIO and Xpeng by having a range of diversified revenue streams. This matters. BYD is an OEM for many critical components of EVs through their rechargeable battery and semiconductor business, which has granted them access to a share of their competitors' profits. These businesses are also vertically integrated into BYD's auto manufacturing process, which helps to decrease overall production costs and increase profit margins on their EV sales. In addition, BYD also earns significant revenues from their electric commercial vehicle sales and their handset component and assembly services business, which further offsets the reduced revenues from passenger vehicle sales due to rising competition. Meanwhile, guys, competitors like NIO are focused on developing innovative technology, including autonomous driving and AI, which are expected to propel the future EV industry, and profits from the successful launch of this technology is expected to compensate NIO for their reduced profits from electric passenger vehicle sales due to rising competition. Now, NIO's commitment to perfecting their autonomous driving and AI technology differentiates them from being just an EV maker, but also a tech company. However, it means they are diverting hundreds of millions of dollars into a technology which may never eventuate. BYD isn't doing this, and I believe that is a good decision from BYD. I think it's highly unlikely that any Chinese automaker will solve full self-driving before both Waymo and Tesla do. Highly unlikely. So therefore, I believe BYD has made a smart decision, and what they can do is simply pivot when AI technology becomes available and install it in their cars. This, I believe, is a smart strategy. In addition, I believe all global automakers are struggling currently and will continue to struggle to supply anywhere near enough EVs as what the market will demand. However, BYD is perfectly positioned to supply a huge number of EVs to the market, which won't be able to get enough of them. In addition to that, at this point in time, it is my belief from looking at BYD's fundamentals that BYD is the only car company in the world right now that can supply a comparable EV at the same cost as a gas vehicle. I don't believe any other automaker is currently in a position to do that, including Tesla, including GM, including everybody. Volkswagen, nobody. BYD is the only company in position right now to sell their EVs at a similar price as gas-powered vehicles and not to lose money on those sales. That matters. Now guys, in conclusion, I'm confident that in the next 5 years will be a highly profitable period of time for BYD due to increasing demand for their products and services that the company has already proven to offer at a high quality. I believe the stock is reasonably priced, but in comparison to its competitors such as Tesla, NIO, and Xpeng, it is clearly dramatically undervalued. And that's why I believe BYD stock is a buy and why I own the stock. Now guys, remember, I am not a financial analyst, so take this information with a grain of salt. Do with it as you please. Make your own mind up. Don't be a sheep and follow what I say. Do what you think is the right decision. If you're interested in learning how to invest in BYD, if you're in a country outside of China, I'll have a video on the channel very soon which will explain to you the easiest ways to invest in BYD. Hey guys, thanks for watching the video. Remember to subscribe and like the channel, and this will enable me to bring you more high quality videos about other potential companies in the market that I believe are also worth investing in. I hope you've enjoyed it. I'll see you on the next one. Bye-bye.